Boom. What's up, you guys? It's Royce Jacob, and welcome back to the channel. In this video, I want to talk to you about why I'm so bullish on small to mid-cap stocks as we head into the summer of 2023. And when I say small to mid-cap, I'm primarily talking about stocks with a market cap under, $8 to $10 billion. And when it comes to my personal preference, I typically trade stocks around $1 to $5 billion, just to keep it transparent. Okay, so in this video, we're going to kick it off with my primary fundamental arguments for this macro trend. We'll then move on to a little content recommendation that I have for you guys, a little homework for you to do if you choose to, that has to do with institutional investors. Because as always, you want to know where the big money is flowing and do your best to front run that big money, because that's really where the life-changing gains are made, especially with these small to mid-cap stocks. Okay, and then lastly, I want to give you guys an easy way to trade this trend or play this trend if you agree with my sentiment, and a simple way to put your money to work to capitalize on this trend. Once again, if you agree with the fact that small to mid-cap stocks are going to have a great summer. Okay, and then I wasn't going to do this, but now that I look at my watch list, I'll also at the end of the video give you guys a few of my favorite small to mid-cap plays, and as always, my money's where my mouth is. Okay, so before we get to rating, you guys, please give the video a like if you go on to gain value from it today. Let me know what your favorite small to mid-cap stock is, or hey, if you don't trade small to mid-caps, that's fine. Let me know what your favorite stock is in general as we head into the summer. And I'll talk to you in the comments downstairs. Okay, so kicking it off, we're simply going to read over the newsletter that I wrote this morning. And I actually referenced an older newsletter as well, because this is a trend that over Waves Capital we have been waiting for to really come to fruition for quite a long time. And it's really, really validating to see it picking up momentum. It's been in play for a while, but today, it's May 22nd at the time of recording, really signaled a pivot, or really a strengthening of this trend in my mind, I should say. Okay, so we're kicking off the new week with a bang. And the price action that we saw today was a thing of absolute beauty. The reason for that being, as you can see here, we have four major equity indices or equity indexes. The Dow Jones, the S&P 500, the NASDAQ, and the Russell 2000. As we go down the line, pretty much goes from Dow Jones being the most heavily legacy-oriented, S&P 500 pretty much just the benchmark of the U.S. the benchmark index of the U.S. markets, the 500 largest companies in the U.S. The NASDAQ, very tech-heavy, 100 of the largest tech companies in the U.S. And then the Russell 2000, which is the small-cap index. And as you guys can see here, the Russell 2000 significantly outperformed everything else, like by far. Okay, so Dow Jones is red, legacy heavy was in the red, and the Russell 2000 small cap index was up 1.3%. And this further validates the narrative that capital will begin to flow from fair valued mega cap stocks into undervalued small to mid cap stocks. And this is an excerpt from a newsletter that I wrote just about a week ago, I think, that highlights the primary reason that I have been and will continue to be hyper bullish on small caps and mid caps. Okay, so as we've discussed many times this year, and if you guys have been following the channel or definitely subscribed to the newsletters, then you know that this is something that we've been, again, a trend that we've been expecting for quite a long time. And again, today really, in my mind, solidified the direction of this trend, or like really validated the fact that this trend is definitely in play. Okay, so there are still record amounts of institutional capital, which again is why I got some homework for you guys. Institutional capital that have been sitting on the sidelines waiting for the green light to get back into the game. The primary job of the individuals of these funds and institutions is to provide above average returns for their investors and LPs. Investing in the S&P 500 isn't going to get them there, but investing in growth assets and small to mid-cap stocks that have meaningful multiple potential can. Okay? So, again, I did read this before, I think, but massive amounts of capital are finally being redeployed. And at this point, the name of the game is trying to front run where all of this cash will decide to find a home. And as always, I'll continue to do my best to do just that. And again, I do want to give you guys just an easy way to play this trend. This is one of the primary trends that we expected to see unfold over the course of 2023. And it looks to me as though this is heating up as we head into the summer. The trend is your friend. That's a cliche in the investing game. It's a cliche for a reason. It's because it's true. And this trend is definitely a friend of Waves Cap. I trust that it'll continue to pick up momentum over the coming weeks and months, and I'm pumped to see what the portfolio can do as it does. All right, you guys, so before we get into this little content recommendation, what's the big money doing? If you want to trade with me on a daily basis, again, I'll give you guys just the ticker symbols of a few of my favorite small to mid caps. But if you want the daily breakdown on my trades, a complete breakdown of every single call option, like every specific call options position I have on some of the positions I'm going to name, and honestly, many more. That's going to be the first link down below. And of course, along with a complete breakdown of my entire portfolio, which I do update every single trading day during market hours and send out the trade alert, which this newsletter is right here below this. Again, is an updated screenshot of all of my updated trades for that day. And again, that's every day, along with the price targets newsletter, where I cover some of my favorite names. AI was at the top of this one that I just released this morning, and all the names you see here, just going over trades, going over fundamentals, going over technicals, and that's every day, you guys. So if you want all of that, it's the first link in the description. Complete portfolio daily newsletter, and you receive everything that this little box right here entails, all for the price of $15 a month, $40 for every 3 months. But try free for 7 days. The reason I have a free trial is because I'm so confident in the product. So give it a shot. If you don't like it, you can just unsubscribe. But I trust you'll be sticking around, and I look forward to having you guys on the winning team if you do. So thank you if you choose to join. Again, welcome to Waves Capital if you do. But if not, no worries at all. You're lost. Let's keep moving on. So, as we said here, there have been a record amounts of institutional capital that have been sitting on the sidelines, pretty much since I'd say early 2022. The markets peaked in November of 2021. I think the markets peaked, especially growth sectors peaked back then. Bitcoin peaked, pretty much everything peaked, okay? Since then, it has been a free fall. The Fed intervened. The Fed's been raising rates. Pretty much ever since this Fed started to really hit the gas on raising rates, that's when institutional capital, or again, just big money, whales, whether it's pension funds, hedge funds, etc., kind of pulled their money out of the markets just to sit on the sidelines and wait for the macro to cool down. Right now, as of May 2023, moving into June real quick, it's looking like the Fed is going to pause pretty soon. And really, when it comes to a single macro catalyst, that is what these institutions are looking for in order to, in terms of like, if there was a green light for these institutions to really start deploying capital, it's for the Fed to officially pause interest rates, at least hiking interest rates. And it's a very, very, very likely, given cool inflation data over the past couple of months, that that's going to happen in June. Okay, so that's great news. Again, if you guys do want to check this out, this is it's actually an interactive PDF, which you'll see here. But this is the 2023 Global Institutional Investor Survey done by this amazing company, Nuvi. And it's crazy how this is free, to be honest. So pretty much what this is just, and this isn't a sponsor, this is just something that I found a lot of value in myself. This is how investors are rethinking markets, reallocating portfolios, and responsibly investing amid dramatic shifts in the macroeconomic and geopolitical landscape. And this is their third annual research survey of 800 global institutions, institutional investors, and covers new insights how investors expect to achieve their investment objectives. So it's just a PDF right here. I'll put this link in the description if you guys want to check it out too. Again, I have zero affiliation with them, but this is just a really, if you want to be in the investing game, if you want to be in the trading game, you'll definitely learn something from this. So I definitely recommend you guys go check it out. That's the homework. Again, no pressure to look into it. But again, if I read over that, I learned a lot, so I wanted to share with you guys. An easy way to play this trend, if you want to play the small to mid cap trend, hyper growth stocks, these revolutionary sectors, which, obviously are stocks that we really cover here on the channel all the time. Pretty much the only stocks I like not only investing in, but trading as well. It's just funner. And again, you can see that's where you see outsized returns. That's the reason I really prefer small to mid cap stocks. Finding under the radar plays that have revolutionary potential, revolutionary potential as a company, but also, kind of revolutionary return potential as well. And as you can see, the watch list right here kicked off the week with a bang. And there are some heavy hitters on this watch list. Okay, so again, break these down a little bit after this. But if you guys want a simple way to trade this trend, again, if you guys agree with the fact that small to mid cap stocks are going to have a hot summer, ARK Innovation ETF, in my opinion, is an easy way to do that. Okay, and if you guys don't know what ARK is, just go look it up, Google it. But what ARK is, it's a fund made by Miss Cathie Wood, pretty much queen of growth stocks, and it's just a basket like every other ETF. It's a basket of stocks, diversifying in growth tech, SaaS, biotechs, and it's just accumulation of stocks that are small to mid cap, like we're talking about, and have that hyper growth revolutionary potential. Okay, so ARK Innovation ETF is just a simple way, obviously, that you can play like the Russell 2000 as well. But in my opinion, I think hyper growth stocks in these revolutionary tech sectors, specifically like real growth tech stocks, which is what the ARK Innovation ETF focuses around, will really succeed here. And when you're talking about the technicals, it looks amazing. So the reason I'm so zoomed out here is because I just wanted to put things in perspective before we zoom in and talk price targets a little bit. So, maybe you guys can have an idea. If you do want to trade this, again, I'll just give you guys my idea when it comes to the short to medium term over the coming month. I'll say how high I think this thing can go. But to put it into perspective, since the high in February of 2021 that ARK saw at 160, it has fallen. It's currently sitting down just about 75%, but it fell to a low, 80% correction from peak to trough. And again, currently still sitting down 25% even after this comeback. So again, the macroeconomic backdrop couldn't be more different. We're in a way different environment. Again, Fire Nation attack, times have changed. But we are starting to come back again. Interest rates being paused will definitely encourage a whole lot of capital that's just been sidelined for so long to get back into the game, look for a new home. And again, the job of these LPs is to provide returns, outsized returns. It's easy to invest in the S&P 500, but again, if you're paying these hedge funds to premium to invest your capital, you need to take some risk, right? There needs to be some risk. And right now, when it comes also to fair valuations, historically speaking, mega cap stocks and like the S&P 500, when it comes to forward PE or price to earnings ratio revenue, the forward PE, which is the price to earnings ratio, large cap stocks are significantly more overvalued than small cap stocks. So historically speaking, small caps are undervalued. Small caps also work on a 10 to 12 year cycle where they start to outperform large caps. And right now we're really kind of approaching that cusp. So I just wanted to, I talked about the primary argument, which again, institutional capital needing to provide outsized returns. Personally, that's my main argument. But I just wanted to give you guys a few other statistics that are floating in the back of my mind as well. Okay, so anyway, ARK Innovation ETF, when we zoom out, really the price target that I have when it comes to the short term is going to be this line of macro resistance or long-term resistance. Super simple. Again, touch point here at the peak in February of 2021. You get the next touch point here in November of 2021. This line has not yet been retested. And at this point, considering ARK has pretty much played out a beautiful bull flag, broken medium-term resistance. This line of resistance right here has been in place since February of this year. We broke above that, came up, retested broken resistance as new support, so we got that out of the way. And again, today we saw a nice 5% jump up and off strong volume, and this is just looking extremely bullish. So this line of, once again, long-term resistance has not been tested since November of 2021. I think it's about time for a test. And if we do manage to test this on, let's move my fat head or just move this over. in mid-June, June 14th. Again, not guaranteeing we'll test it on this date at all, but it's just where I chose to draw this, honestly. If we happen to land on this line of resistance on June 14th, that would result in just under a $50 arc. Okay, and on top of that, it looks to me like we're kind of playing out this inverse. I mean, this is a janky inverse head and shoulders pattern, but a lot of times technical patterns are based upon psychological trends. That's what I was looking for. Technical patterns are based upon psychological trends. So I do think it's possible that we do also play out this little inverse head and shoulders pattern. This is the head. You got some two massive shoulders on this thing. And in that, if that's the case, then I think we could easily see 52, 53 bucks over the coming month or so. Okay, so that's ARK. Again, you guys, whether you want to buy call options on this, whether you just want to buy some common shares, it's perfectly fun as well. Even for the long term, as always, none of this is financial advice at all, but in my opinion, ARK would be a great buy and hold for the next 3, 5, 10 years if you're looking to just set and forget some capital. But there are also so many great small caps, and again, this remains a stock pickers market. If you look at ARK, again, great play. You got 5% back. If you have some call options, they probably went bonkers today. But over Waves Capital, and again, you guys would know this. Congrats to you if you got in on some of these trades. You got Riot up 10%, Coinbase 7.5%, C3 AI. We just picked up, I don't know if you saw right here at the top of this newsletter, just picked up some calls on Friday on that little pullback it saw. Those were up. I think our call options were up like 70, 80% today. Pagaya Technologies. This is one of my dark horses in the portfolio. Up 26% today. And obviously the call options I have on that, bonkers. Garden Health, great biotech play. And ChargePoint's a play that I just feel has so much return potential. And honestly, a very safe play. So again, you guys, this is a stock pickers market. You can easily succeed by buying these ETFs, the ARK Innovation ETF, Russell 2000. But if you really want those outsized, meaningful returns, the life-changing returns, you got to do your research. You got to do your due diligence, and you need to take some big risks. Again, no gamble, no gain. You got to take the risk to get the reward. And again, I'm always doing my best to do just that. Not always successful, but hey, if you just hit a few big winners, that's enough to make up for every loss that that you had before that. But once again, I hope you guys appreciated this video. I hope you guys just let me know in the comments down below if you guys are feeling the same. And again, I hope you guys gain some value. So lastly, if you guys do want to join, I don't know why I'm so zoomed in there. If you guys do want to join Waves Capital, once again, that's the first link down below. Excited to see you guys in there. Again, the newsletters come every day, and we got a great community over there. So first link in the description. And once again, catch you downstairs in the comments. Until next time, you guys, always remember, take action, make waves. Peace.